Good morning, folks. Andrew Schartenberg here, your friendly neighborhood mortgage engineer. Today is Thursday, January 6th, and we're coming towards the end of the week here. So I wanted to give you the rate report and your home buyer tip of the day. We have been holding steady with interest rates. Really, we're at still 4.875 for a conventional Fannie Mae or Freddie Mac fixed rate loan, the best scenario. For FHA and VA government financing, we're talking 4.75, so still a little bit less than the conventional, and we have been holding pretty steady at those rates. Today, we actually, in my opinion, we saw validation of my thought that the labor market really isn't doing too well. So what we had seen a couple weeks ago, or last week really, was better than expected jobless claims data come out. And I had thought it was because of the holidays and people just not letting go of folks during that period. So the claims were 391,000, which breaks the benchmark of 400,000, which is a good number for economic forecasts and the labor market, but not good for mortgage rates. We want to see more unemployment, as messed up as that sounds. This week we saw 409,000 claims, which is more than expected, and I really think that that's where we're headed. I do not think the labor market is good right now. So that lends to my belief that we're going to see a pretty poor economic employment report come out tomorrow. So tomorrow, Friday, is the release of the monthly employment situation. The key data that's going to be in that is the number of jobs that are added or lost in the economy. It's going to be the unemployment rate, and it's going to be average hourly earnings. We want to see those numbers come in worse than expected, and the consensus right now is that they're going to come in a little bit better than it's not going to be good for us. So really what we're looking for is more jobs lost, wages to go down, and we're looking for the unemployment rate to go up a little bit. And I really feel like that's going to be the case. I could be wrong, and even if I am wrong, I don't think that even if it's just this month, that's going to be necessarily a bad thing. In the short term, for folks that need to lock an interest rate, it very well may be. But as the economy gets into the doldrums of winter here, I really think that we're going to see some negative economic reports coming out in February and March. So we very well could see rates go down. So that's rates for you today. The home buyer tip of the day is regarding homeowners insurance. So a lot of you folks, whether you buy now or you currently own a home, a couple things to note on that are that your homeowners insurance is very dependent upon the price of your house, the location, and your credit score, believe it or not. Those are three of the key factors that insurance companies use to determine your premium for that. So how does an insurance company value your house? It's a lot differently than what the appraiser or the town looks at it at. The appraiser is going to look at it based on the market and what's selling around you, so that gives you your value when you're trying to buy or refinance a home. The town is going to do the tax assessment, and that's going to be similar to the appraisal, but it's going to usually be a little bit more dated and not quite as high quality. So again, that's looking at the value of the house. An insurance company is going to look at the replacement cost of a house. So they're looking at it as if it would burn to the ground, get knocked down for whatever reason. How much would it cost to rebuild the structure? So what we're seeing these days is that your appraisal and your tax assessment could be a significant amount less than the replacement cost of the house. A couple years ago, that wasn't necessarily the case. When real estate was at its peak, the value, what you could buy a home for was quite a bit higher than a lot of times what the actual replacement cost of the house was. But that has totally fallen on its head, or flipped around. And these days, a lot of houses would cost more money to rebuild than they would to buy. So the key thing to note there is that when you have a mortgage on a property, you are required to keep homeowners insurance on your property, and it has to be for 100% of the replacement cost. So when you're looking at it and you're shopping around, You may see that an insurance company comes out with a replacement cost of $300,000, but you're only buying your home for $250,000. Well, you need to have it insured for that full $300,000. It's going to be whatever they deem the replacement cost to be. So you need to keep that in mind. You should also get usually 2 to 3 quotes. I recommend when you're shopping around for homeowners insurance, because many companies are going to be stronger around different parts of the state. That's going to be very true around some of the larger states, and certainly in Rhode Island as well. And we are the smallest state in the union, but from town to town it varies greatly. Uh, there are certain companies that are excellent down by the water in Narragansett and South County area, and then other companies that are better in the northern part of the state and the central part of the state. So it's definitely a good thing to shop around for. You could be talking about a difference in an annual premium of $800 versus $1,500. So that's not a small amount of money. And you should probably do that on an annual basis, even if you have homeowners insurance already. You're not shopping for a home. You should continually review your policy. What you can do is you can usually get an umbrella policy. So it's nice to start with the folks that you have your cars insured with, because sometimes you can get a discount for insuring the home and the cars together. So that's kind of a primer on homeowners insurance. I'm not an expert in the subject. I do know a bunch of experts in the subject, so if you ever need a referral, you can get in touch with me. But that's the basics on insurance, folks. So if you ever need me, you can get me at andrew@otfunding.com. That's my email. Again, andrew@otfunding.com. Thanks, and I will see you all tomorrow, folks.